Cohere is a pretty clear sell. Okay. It is tough to imagine worse signals coming from a celebratory fundraising announcement, but that's exactly what we have this week from Cohere. So, to bring you up to speed, Cohere raised a $500 million round at a $6.8 billion valuation. So, you're going to say to yourself, Arnold, like, isn't this good news? I mean, it was an up round, all this sort of good stuff. Well, I'm going to go in and tell you why it matters and what this actually means. And just as a bit of background, Cohere develops and sells large language models to enterprises. So think about it as like AI, but they're really targeting enterprises as opposed to, let's say, ChatGPT, which is more for consumers as people think about it. And so, really trying to focus in on that space. It's kind of crowded. We'll talk a little bit about the competition, but I want to dive in on the fundraising aspect of this and why this sends a real negative signal to people when you really get into it. So there's a few things that matter here. The first off is the valuation. So that 6.8 billion starts to look a whole lot less impressive when you realize that just 12 months ago the valuation was 5.5 billion. So basically the stock price gained 15% in a year as a result of that when you take into account kind of the new money coming into the company. Now, over that same period of time, if you had just put your money into the NASDAQ index, that went up 26%. So already you have lost out to the public market in a moment where there should be all this momentum behind it. Think about what's happened with NVIDIA. Think about OpenAI, Anthropic. Like everybody that's got AI at all attached to them has done very well. The market as a whole for tech is up 26%, and you eked out a 15% gain with all those sorts of tailwinds. That's a real negative sign there. And on top of that, that 15% doesn't really tell the full story. You've got to also think about the average dilution for shareholders when you take into account employee stock grants. So at OpenAI and Anthropic, the different reports we've seen, you're seeing anywhere from 10 to 20% dilution for shareholders there, while you're giving out more and more shares to employees, some of these top researchers that we see and otherwise, but all along the lines for it, you're having to give out a lot of shares to employees with that, and that hurts you as a shareholder. So even if you're at that low end of the range of like 10% or so, that means your overall return goes from 15% down to about 5% for the year, and you're crushed by what you're sitting with, with the Nasdaq over 25%. So real caution there. Numbers kind of look good in a headline or otherwise, but as soon as you start digging in, there's some major red flags here. NVIDIA and AMD are also big investors. I always look at that kind of critically. It's basically them it's not like a traditional investment like you or I would do in it. They're getting something back, right? As Cohere is developing these models, it means more usage of NVIDIA chips, and all they're really doing is just kind of recycling that money back. So I don't really infer much positive from that, the fact that they're investing in here or putting more money into it. Also, the round was led by two Canadian investors. I think this is significant. Cohere is headquartered in Toronto. It's kind of a Canadian success story, but having two of your lead investors for it be Canadian really paints the wrong picture here. Ideally, you want to be in a situation where if you do want kind of like a local champion, a great VC that is local, that's well connected, that can get you into some of these sorts of bigger enterprises, which maybe these VCs can do, pick one, take that local, make sure that they're kind of the best, and then go out and get somebody that's really, top of the line everywhere in the world or otherwise, and try to make that happen. And I think if you look at Canadian success stories, Shopify, was invested in early on by Bessemer. So, US firm, well regarded, in kind of that top tier, top echelon. And, they were able to kind of get that. Sure, they had their local network, mostly in Ottawa at that point or otherwise, but they really were able to kind of get that kind of best of class US investor. I think that's really significant here. And the fact they either didn't want to do that, which is a huge red flag, or they weren't able to do that, which is also a red flag. Either case, it's like let's sell that here. So Ontario Pension Plan also participated. So, for all of our friends up north, I could, pour out a small Labatt Blue for you over now having to hold this bag as it sits there for Cohere. So have fun with that one. Also, they say that it was oversubscribed. I think we should all just like stop saying this, like literally stop using the word oversubscribed when you have the context that could basically mean you had $1 more of interest in the round. So $500 million plus a dollar, you can say that you're oversubscribed. Literally means nothing. It just, if you don't have anything more powerful to say about the round, just like don't even bother throwing that in. So it's interesting that this was an up round. They're trying to take a victory lap. But I think when you dig in, it really reveals a different story here. And I think just to get some sense on valuation, so Reuters had reported earlier this year that Cohere had crossed the $100 million annualized revenue, I think back in May. And Cohere is actually telling investors now that they think they're going to hit 200 million in annualized revenue by 2025. And just for frame of reference, we've talked about Lovable before. I'm a big fan of Lovable. I like where they're going with it. They're sitting also having crossed that $100 million annualized revenue somewhere in that kind of June, July timeframe with a valuation of 1.8 billion. So a lot cheaper for kind of what you're getting. And there's competition in both spaces, of course, but I love where Lovable is for it. And I think it paints kind of a negative, picture here for Cohere and just the value that they actually have per dollar of revenue that they're bringing in. I don't view their, being nearly as good of a value proposition. A big part of that is I think there is a price war coming here. I think OpenAI has shot the first salvo in that, kind of letting people know that this is actually coming, both with open sourcing some of their models, but also reducing costs for their tokens. And that I think is really significant. I've talked about how that has an impact on Anthropic, but I think that actually goes way down kind of for all of these smaller competitors as well. They don't have a lever on price in a significant way. If OpenAI is really signaling that they are going to come out and they just want to be like LED lights, like we're cheap enough that you can use them everywhere kind of thing and not have to really think about it, well, that's going to really hurt gross margins for smaller players like Cohere. And when they go into enterprise sales processes, it's just one less lever to pull. So really strong going up against OpenAI. I think Anthropic is really viewing this as like, we have to win enterprise. And the fact that Cohere is competing directly against that, I think that makes it very difficult. It's not really clear to me how they distinguish that when Anthropic's able to tell a bigger world-beating story about how awesome they are at enterprise, and they have the kind of pull and perception of Claude Code, which I think casts a better kind of branding umbrella over their whole, the whole space for Anthropic. You're much more ready to believe that someone who has developed a product that engineers who are actively aware of the nuances of LLMs and AI are using regularly in their day job, that is an incredible endorsement for when you think about enterprise buyers who might be technically way less savvy. They have in their mind and that sense of like, oh, wow, okay, well, Anthropic has built some great products that people who are very technical and seem to know these things really love. Maybe they can help with what I'm trying to do as a Fortune 500 company or otherwise. I'm certainly, understanding what that is and looking at it more seriously with it. They've also got, other lesser known competitors that are out there. And I mean, it's hard to kind of overstate the value for like an OpenAI or an Anthropic of just having that brand being out there so much in the enterprise buyer's mind, either because of the consumer or Claude Code, that really helps with kind of just like driving a huge amount of inbound and lifting, making all of the salespeople at OpenAI and Anthropic just so much more effective at their job. They have to do a whole lot less work, I think, to get customers over the line, and that kind of effect really compounds as you go. But even as you get out of the kind of those really well known companies, you've got Together AI, which I think is leveraging some of the open source models. And as those get better and better, they're really focusing on like, how do we take these awesome open source models and allow you to put them on premise for an enterprise and make that be something that's an easy experience for you as a buyer. that's really nice. I think that that can kind of complement where things are going on the open source side. So Cohere's got to compete against that. There's U.com, which is has a very similar, offering to where Cohere is. You've also got Palantir, which is really kind of coming at it more from a consulting side, but has those interfaces with a lot of the, Fortune 500 and Fortune 50 companies where they can do big installations, they can do a lot of big projects, and they have a lot of the credibility there within it and a lot of the revenue. If you're an enterprise buyer and you're saying, okay, this company just did 100 million in annualized revenue, and we're talking about a project that's realistically 20 million, that's way too big for this company to kind of take on with it. Way too much, and I don't have the trust that they're going to be able to kind of pull through and be able to do a good job here. Like I might, when I look at the Palantir's revenue numbers, I know that they can handle a $10 million project. I'm seeing that, and getting that kind of reinforced with it. And there's also smaller competitors like Reka, I mean, even Mistral as well. I don't love the kind of local champions aspect that you have with Mistral as well and Cohere. Like Mistral in France, I mean, they can go to every French company, and there's kind of this sense of like we should be working with them. They're a local champion. I think it can make the company pretty distracted. Anything that takes away that kind of cutting edge, like we need to compete, our product needs to be amazing, we need to tell everybody about it, we've got to get that marketing really tight and awesome, is a distraction from the kind of ultimate goal. And it can lead to these kind of more provincial mindsets of like, why are we doing this? And where is this? And otherwise, that I think is just kind of overall distracting for the company. And you just don't get that at OpenAI and Anthropic, and even some of the others that we've looked at. You have more of a sense of like they are moving towards where they want to be moving. Maybe their strategy isn't the right one, but hell, they are moving exactly where they want to go, and moving with pace for that. So I think that's a big element here, and maybe some of the reason why like the growth just hasn't been that strong, and we're not seeing anything to kind of think that that story would really change with Cohere. And overall, I think just when you look in comparison to others in the space, they're not nearly loud enough. I don't think they're kind of cutting through the noise of like why you would pay attention to those models or otherwise. I bet the name recognition is really low overall for it. I think I've drawn in to more just really understand like, okay, who are other players in the space? But I think a lot of people would just kind of gloss over this, even despite the fact that they do have, a valuation now well over that $5 billion mark, which is obviously not insignificant. But now in comparison, I think it's pretty clear they're just being left behind here. So interesting to see if they do start to get a little bit louder or try to make some more noise, or if like this one's already been packed up and ready to go, and it's just a matter of we're going to watch this play out and kind of be in zombie land for a while. So anyway, let me know what you're thinking down below in the comments. Did I miss anything? Are you bullish on them? Are you bearish? And of course, subscribe to get more analysis on private companies.